Okay, hey everybody. Dan Fitzpatrick here, stockmarketmentor.com. If you're not a member, you're kind of missing out, okay? Because we're smoking on our active trades. One of them is Viking Therapeutics. Now, this got a lot of play the other day. I think it was actually Wednesday after hours, but it could have been Thursday morning. It doesn't matter to me because I only trade when the market's open. But the company basically had a breakthrough in their obesity product that kind of screwed Eli Lilly a little bit, let's just say out of the lead spot. And so the stock really, really cranked on really, really ran hard on this day. Sorry about that. There we go. On this day. And the way this volume was, you just kind of knew that this is massive institutional buying here, huge institutional buying here. And this is not, when you see this type of a pullback or this type of a consolidation, and listen to me, when you see this kind of a long consolidation, the stock tightening up, and then it explodes out of this consolidation on news, on massive multiples of average volume. This has to be institutional buying. And the reason I'm emphasizing that is this, because institutions don't just buy in one day. They're just not going to do that. They jump the stock up to infinity. There's been some quiet accumulation here. That's what makes a base. But when they decide to buy, they're going to take a bunch of it here because they're all bidding against each other, but they're going to continue their buying campaigns into the future. And that's why this is really not surprising that the stock's up another 7.2%. And so what I think you got to do is you got to be paying attention to this pattern here. I haven't seen stocks do this. Just pay attention to this one. I haven't seen stocks go up like this and then wham, drop down a lot. I've seen them pull back a little bit here, but then ultimately move higher. But we could see this stock, you could see this stock just continue to go for a bit and not really pull back until much higher, say maybe even 85 or something like that, because again, this has a lot of institutional buyers and they're not just going to buy forever. So at some point, this momentum is going to wane. The stock will pull back and give you an opportunity to get in if you missed this, or if you're just looking for an opportunity to buy more. You would buy more, not when the stock pulls back. Okay, knuckleheads do that. You want to buy more when the stock pulls back and then shows you that it's done pulling back. See, if you're not waiting for this part and instead you're just buying this, well, then what you're doing is you're trading on the, well, it's gone down far enough trading strategy, and that doesn't work. So if the stock does pull back, you want to wait for the pullback to run its course and boom, and then grab it on the first up day. But for the time being, I think you got to just take these puppies out and just watch and see how high this thing can go. So anyway, that's all I got for you. By the way, I'm teaching a class. It's called the 59-Minute Trader. It's essentially a day trading class. That's the way people look at it. I don't really look at it as a day trading class because the last thing you want to do is trade all day. It's really trading the hour of power, looking at some of the things like I was just mentioning to you about what are the institutions doing? How do we make money with the institutions? How do we pounce on the knuckleheads who don't understand how the opening rotation works? So if you've ever kind of wondered how to make really good money during the opening hour, you need to be there. And you could just go to my website, stockmarketmentor.com, and figure out how to get that. It's actually 59minutetrader.net is where you can do the sign up page. But anyway, if you really want it, you can find it. I guarantee that. So I will see you on Monday.